Good afternoon. Today we are going to dissect a stock technically, and the stock is Cipla. This is a chart which is futures chart of Cipla of last 3 years. This is calendar year 2010, this is calendar year 2011, and this is 2012 calendar year. Now what we find here is that a very intriguing aspect of the prices, that for last 3 years the prices were moving in the range of 380 to 280. That is, in 100 rupees range the prices have moved, and now it seems so that this is a weekly chart. So now it seems so that the prices are threatening to move upwards. If it crosses comfortably 400 rupees, then we can see that a major breakout may be ensued and the prices can go much further beyond to a target of 480 to 500. Now when we compare this 3 years chart, what we find that the stock has been in a trading range, and now what we see here in the volume thing on the weekly chart, that volumes have increased considerably and are in comparison to the volumes of calendar year 2010. How the stock can be moving technically, and what are the returns and what are the risks, that we will try to see. A more generic term that we try to find here is the monthly charts from the calendar year 2006 to the calendar year 2012. And the beautiful aspect is that in calendar year 2006 to 2009, Cipla was moving in the range of 240 to 120, and after that, after 2010, Cipla never came below 240 or 260, 240, 260. A bit of approximation has to be taken here. And that was a peak of calendar year 2006 to 2009 range. So a beautiful aspect of technical analysis or a stock which is in bull run is that when a stock makes a high and then crosses its high and makes a new high, and when a throwback happens, that means when the prices come back, it never goes beyond the previous high. And this is what we have seen here. So we can justifiably say that the stock is in a bull run, and from this premise that the primary trend is long, the primary trend is good, strong, bullish, so we can assume that key prices, if crosses 400 rupees, will make a further new high. Now this is a daily chart of Cipla. If you find here this was what you can say a gap which is in the region of 347 to 342, and then the prices moved to 400. From there it consolidated, and the consolidation was done in the form of a descending triangle, which is always supposed to break on the downside, but this never happened. And from the last few days the prices broke this trend line and moved upwards. Now when you see that this is on a much higher volume, and even what we find here is that the OI has increased considerably. So the second thing which actually supports our bullish premise is that when the stock made a new high at 400 rupees, consolidated in the form of a pattern which is known as a descending triangle, which itself by virtue of the nature of the pattern is a bearish pattern, is being broken on the higher side. That means it has a breakout on the upside, which means it negates the downside, is again supporting the bullish premise. Now what you find again here is that again a beautiful thing, that when the stock prices were moving from December lows to January, February highs, 2012 highs, the prices have found support in the same region. This was a January 2012 high, and the volume has increased considerably here, and the prices are finding a support. That means this new high has become, this resistance has become a new support in this region. Now what we see again a daily chart, what we find here is that this gap, which can be termed as a breakout gap, and this breakout gap is not gonna to be filled till the time this support is being broken. So this descending triangle, and now we are witnessing today on 19th of November, is a kind of a throwback from the prices from 400 to 380 region. 380 was a previous high, and so it is trying to find support here. If the prices really take a support here and move upwards, Cipla is going to be in great bullish region, or the prices are going to move much higher. On having a risk side of the thing, at present it is moving in the region of 382, 383. So we have initiated a long con on Cipla with a stop loss of 360 and a very hard stop loss of 340. So from this point of initiation of long, our risk is around 20 or to a larger extent of around 40 points, that means of 40,000 on one lot, and our reward is somewhere around 480 to 500. So we feel that this is a 2-hour trade, that means risk is a half of what the reward is. And if somebody who is not going to take positions much higher can take a stop loss at around 360 and go long at this region. Thank you.